And hello, everyone. Welcome to Power Scanning. It is October 18th. And once again, today we will be looking for the most interesting setups for the week and the weeks ahead. And what better day to do it on a calm weekend? It is Saturday, 12 p.m. Eastern Time here in Montreal, where I am greeting everyone from our headquarters here in Canada. And my name is Daniel, as I mentioned. And before we get into it, please let me know, where are you guys calling in from? Who do we have in the room today? So please put your location, if you don't mind, into the Q&A box. So who do we have? We have Gerd from Germany. Hey, Gerd, how are you? Lenny from New York City. Hey, Lenny. Nice to see you again. And Lenny's saying that it's a brisk morning in New York City. Yes, similar to the weather here in Montreal. It's actually quite chilly out there. Oh boy, winter is coming. Daryl from San Francisco. Hey, Daryl, nice to have you. Arthur from Hamburg. Hey, Arthur. Moin, moin. How's it going? Cheng from Singapore. Hey, Cheng. What's going on over there? What time is it in Singapore? Must be yeah, quite a rough time for you. Donna from Virginia Beach. Hey, Donna. How's it going? Danica from Cornwall in England. Oh, nice, Danica. Normally from, I believe, Germany. Gerald from PEI, Prince Edward Island. Hey, Gerald. How's it going? Frank from Den Haag. Frank, nice to see you again. Yeah, it's midnight in Singapore. Yes. All right, Cheng. I hope you can stay awake during this session. Stephen from Lincoln, United Kingdom. Hey, Stephen, nice to have you. And Masa from New York City. Perfect. And Masa, yes, the chat is disabled. Please put your questions into the Q&A box. Just easier for us to keep track of all these questions that way. And Aubrey from sunny Cyprus. Des from Perth, Western Australia. Oh boy, Des, what time is it over there? Crazy. Yeah. Wow, what an international crowd today. Amazing. Oh, and Danica says normally she is greeting us from K-Town, Kaiserslautern in Germany, but today in England. And Ed from Virginia. And Lenny says, yeah, it's amazing how international it is. Really amazing. The wonders of technology. Andy from Mainz in Germany. Hey, Andy, how's it going? And yes, Lenny is the neighbor of Massa in New York City. Perfect. All right, guys. So thank you so much for sharing your location with me. And let's get into it. And Des said it's also midnight in Perth. Oh boy. Amazing. Thanks for joining us, guys. I really appreciate it. Okay, so once again, today we will be on the lookout for what we call swing trades. So a swing trade typically approximately lasts between 2 and 20 weeks. So it's not really a day trade. Well, it's definitely not a day trade, which you would open and close within the same day. And we're also not looking for long-term investments today, even though this is possible with our dashboard. We're right in the middle of these two things, the swing trade, 2 to 20 weeks. And the beautiful thing about our dashboard and what I'm going to show you today is this is something that everybody can do in just a few minutes. We call this the 13-minute strategy. Honestly, once you get the hang of it, it will take you less than 13 minutes to find interesting symbols to trade every single day. There's just a couple of clicks. Our dashboard is lightning fast. And how this works, we're going to discover together today. Now, who are we in the first place? So, if you're joining us for the very first time, a quick introduction. We are tradingindicators.com. And as our name suggests, we specialize on creating innovative trading indicators. We've built thousands of those for clients all over the world. But, we've also spread out. So, we not only develop trading indicators, but also trading tools and trading scanners. And one such trading scanner we will be using today, it's called Liquidity View. And it's a scanner designed to simplify your trading, to allow you to find what we call the needle in the haystack. We can scan through thousands of stocks, more than 5,000 stocks, but only a handful of them will have promising setups every single day. And then trading, of course, we want to focus on the most promising symbols. Why wouldn't we? Now, we need a tool for this to find these interesting symbols, and this is where our dashboard comes in. Real quick, my name is Daniel, as mentioned before. I'm one of the founders of Trading Indicators here on the left-hand side. And Homer, who's in the room today as well, is the other co-founder. And together we have built Trading Indicators more than 10 years ago. And about halfway through our journey, Niklas has joined us, and he's been instrumental behind many of our latest developments. Now, both Homer and Niklas will be in the chat today, and yes, they will be looking out for your questions. And if you have any questions, please don't be shy. Put your questions, your symbol requests, your remarks into the chat box, and we will keep an eye out for those as we proceed through this presentation. I also need to remind you that trading does contain risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is money that you actually can afford to lose. When it comes to backtest performance or hypothetical performance or really anything based on historical price data, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and strategies and setups discussed in this webinar should not be construed as trade advice. These are for educational purposes only. All right, so with this out of the way, a couple of housekeeping items. First off, we recorded a boot camp about the Liquidity View dashboard, the very tool we will be using today. Why did we do this? Because there are so many features in this dashboard. Today, we can only touch a handful of those. If you want to know what all the other features are and how they can help you to find what you are looking for, everybody has different needs. Check out our bootcamp at tradingindicators.com/bootcamp. And Niklas or Homa, please put this bootcamp into the chat box. We also have a Discord channel, which is getting more and more active. In there, we post day trades, but also some swing trade ideas. If you have not joined our Discord channel yet, please consider joining at tradingindicators.com/Discord. It's completely free, and it's a nice way to interact with our trading community and ask questions and learn from the setups that we are posting in this Discord channel. Also, we have written an ebook called The Power of Three about the three main setups that we'll be focusing today: our bounce setup, our zone break setup, and our zone break retrace setup. If you want to know all the details behind these setups and why we think they work the best, check out our ebook completely free at tradingindicators.com/power-of-3. This link is also in the chat box. And lastly, if you have any questions or any feedback regarding our dashboard, please don't hold back. This is what drives the further development of our dashboard. Please put it into the Q&A box or send us an email, such as symbol request or new features or whatever it might be. This is what drives the further development, and it's our inspiration to keep innovating. So your feedback is very, very valuable. And lastly, forgot to mention this, if you want to follow along today, we do have a 7-day trial for our dashboard, which I don't have a slide for this right now, but if you go to tradingindicators.com/view, and Homa, please put this link also in the chat, sign up for a free trial of our dashboard. This only takes a couple of seconds to set up, and once done, you can follow along all these steps that we take to find these setups. All right, now let's start with our market review. So I'm going to switch over now to our dashboard. Let me just quickly find it. There we go. All right. And once opened, the dashboard looks as following. We have our scanner on the left-hand side, which we'll be using shortly to find our setups. But today, right now, we're going to start with a couple of charts just to see where the market as a whole is right now. I'm going to start with the SPY, the S&P 500 ETF. So I'm going to open it up. And what do we see here once this chart loads? Well, we saw that, all right, we did have this big, substantial pullback, I should say, last Friday. So not yesterday, the week before. We can see it here. This big down, but this happened on the Friday, the week before. And it was registered on our trend radar indicator. You can see it here as a level 3 pullback. 1, 2, 3 levels down. The remaining rows here remain green. So this is a level 3 pullback. And this could have been an interesting opportunity to add to your existing SPY position or to enter into a long position in the SPY in the first place. And why do I think this is a good idea? Well, first off, it's the SPY. So from a long-term trading perspective, I don't think you can do anything wrong with having an SPY position. History has shown that, over time, this symbol will go up. But there are good times to invest into the SPY and not so good times. And I am adding to my existing positions every time I'm seeing at least a level 3 pullback on the SPY. And these are good opportunities to, add to your position a bit cheaper, with a little less capital involved. And exactly this is what happened last week on Friday and throughout the week with these pullbacks that we've seen. So it was mainly a sideways week. Prices are still very, very bullish. Nothing has changed there. Also, they are still quite expensive. Even with this pullback, we can see it here. We're quite away from our averages. Our first line here of MA Rush at 646. Prices are currently at 664, so almost 20 points above it, meaning that prices are still extended. And ideally, we want to see a pullback towards at least our first MA Rush line. What about the QQQs, the Nasdaq 100 ETF? So I'm going to open it up here, and it's pretty much the same picture. Prices pulled back also last week's Friday, not yesterday, the week before. We can see it here, a level 3 pullback, and they have consolidated throughout this week, basically a sideways week, pretty much with a bit of a recovery of what we lost on Friday. We can see the level 2 pullback and another level 2 pullback, another trend radar indicator. And then on Friday, prices jumped up and we were all green again. And once again, these pullbacks, these are opportunities to add to your existing long position in the QQQs. Another symbol, I believe that, you can't really do anything wrong with it if you have a long-term perspective on it over time. History has shown that, also the QQQ is likely to go up even after substantial correction as we've seen during the tariff wars, for example. So yeah, bit of a sideways week, nothing really crazy happening last week in the QQQs. And it looks like to me that once again, when the market opens on Monday and next week, we might be attempting the all-time highs or reapproaching the all-time highs in the Qs as well. Or the Russell, the IWM, the Russell 2000 ETF. Well, it's been interesting. We did break in the Russell about a key resistance level last week and also this week, and we posted historical highs in the Russell. And this is something special because this hasn't happened in a very long time. If you go back in the Russell a couple of years, we see that the previous all-time highs, they were established. I have to go ways back. They were established back here in 2021, in November 2021. These were the all-time highs, retested in 2024, and finally, now we are breaking to new highs territory in the Russell. A bit of a pullback on Friday, back to the broken level, kind of a mini zone break retrace setup. Of course, now resistance was broken. And when broken, oftentimes resistance will start acting as a support level. So this could be right now even an interesting point to potentially think about a long position in the Russell in the anticipation that perhaps we're going to see a follow through, a launch pad move towards higher price levels in the Russell. And all right. So, and Dinas or Devendra is wondering, do you think this market correction is short term? Yeah, I believe so. I have no reason to believe otherwise. So, what we saw on the QQQs and the SPY, and also the Russell, it seems to me that this is just, a minor pullback within an otherwise very bullish market condition. You can see it here on the SPY. It's super bullish. Prices have been moving up for a long time with a couple of pullbacks along the way. Now, these are very normal. You can see it here in MA Rush at the bottom. These pullbacks, they will happen every once in a while. These are completely healthy. In fact, we are calling them the healthy pullbacks. So, and to us, these are interesting opportunities to enter or add to your existing position. All right, let's have a look at oil, the United States Oil Fund. Well, oil is about to get more interesting. It keeps grinding lower and lower, and I think we might be on the verge, perhaps, to a potential move to these extreme levels. You can see it here around the 63 and the 60 areas. Why are these levels important? Well, if we look at the big picture, if we go back all the way to 2023 and even a bit further, we can see that oil has been pretty much in a sideways channel. A very broad sideways channel. And if I just go back to my chart here and draw this in, you can see the upper end of the sideways channel is around here at around 83, and the lower end is around the 60 or 61 area down here. And every time oil has approached these extremes, a substantial bounce of these levels was in order. So if history is any indication, if oil was still quite a bit away, but if oil comes close to this lower end here, and it seems to me that perhaps it might, we potentially will see this as an interesting opportunity to anticipate a bounce off this level towards higher price levels. But we're not there yet, and I'm going to be patiently waiting until oil approaches these levels. And you remember the last time oil was at such an extreme was up here in June this year at the 83 level. We caught this trade. And we caught this short trade as a potential bounce off this resistance level. Now oil might be going down to this support level, and another bounce may be in order. All right, so that was the USO. What about gold? Well, Gold has been relentless. It's been going only in one direction after ever since it broke above the key resistance level back in September or beginning of September this year. And then what a follow through. And this shows you the power of these breakout moves. So here we had the zone break, this little arrow here. We broke above this resistance level, and what a parabolic move it was since that point. But on Friday, and perhaps it will get more interesting soon. On Friday, we saw for the first time in a while a pullback in gold, and my hope is that perhaps it's going to be a deeper pullback, and not just this minor pullback here. It didn't even register on trend radar; it was still so minor. I'm hoping perhaps we're going to go a bit deeper, and if we do, I think this could be an interesting opportunity to enter long in gold. But even at price levels right now, with this bearish candle on Friday, at least in my view, oil remains unactionable. Meaning, if you don't have an oil position yet, it's just simply too expensive, in my view. Gold, of course, gold position yet to enter right now. Well, to extend it. It's not my style. I wouldn't do it. And if you have a position, if you are long gold, well, I wouldn't sell it either right now because we're so bullish. This is what we call an unactionable symbol. But I'm hoping for a pullback to a deeper price level. Similar in silver, the SLV, the silver ETF, also a pullback, a bit of a pullback on Friday. We can see it here, bearish candle on Friday. And this one actually registered ever so slightly on our trend radar indicator. You can see it here, one level red, a level one pullback, very low. I'm also hoping here that we see at least a level 3 pullback, something like this. You can see 1, 2, 3 levels down, or here, or here. These could be great opportunities to enter long into silver, but right now it's just level 1. It's still, to me, a bit too early. Also, silver is, if you don't have a position yet, I think too expensive to get in. But hopefully, this will develop in a bit of a deeper pullback, and then this could be an interesting long entry opportunity in silver. All right. One more symbol. Bitcoin. Oh boy. Bitcoin is once again at the verge. What do I mean by this? Well, let's see what happened. Oh boy. What a big volatile move. Now, actually, we had all-time highs in Bitcoin back here in the beginning of October. 126,000 all-time highs. But we bounced off this level. So all-time highs were established, but we didn't really clear this resistance level, this green line. You can see it here. And we had a bunch of liquidity capture events. You see these little shaded boxes here? These are candles which are approaching this resistance level and have abnormally high volume. And oftentimes that's a sign, a precursor that a bounce off this level may be imminent instead of a break of this level. And exactly this is what happened there. We bounced sharply off this level, and look at the size of this candle here 2 weeks ago. A massive, massive move all the way down to this support level, this red area here. A bit of a bounce there, and now we're back in the soup, back at this support level. And in my view, this level better holds, because if not, if we lose this level, I think there is definitely a possibility of a much deeper correction in Bitcoin, potentially all the way down to 74,000. So I hope this is not going to happen for all the long traders of Bitcoin, unless, of course, you're short in Bitcoin. So right now, it seems that the level might be holding, but if we lose it, yeah, a deeper correction might be in order. So if you look at the live prices of Bitcoin, of course, Bitcoin trades 24/7. We can see we're holding it at 106,910 right now. So let's see what happens. Next week's going to be super exciting to see. All right. So this completes my market overview. And Niklas, do we have any questions or Homa?
Yeah, we do. So we got one from Niels here. He says, I can't trade the USO without options.
Yeah.
Here, where I guess it's broker or wherever he lives. He says, do you have any other suggestion for a symbol linked to USO? A different oil contract or symbol, maybe?
That's a good question. I don't, Niels. Have been away from the German market or the Swiss market for quite some time. There are alternatives out there. I know this, and the reason why, yeah, Europeans oftentimes cannot trade at the USO or the GLD or the SPY is because of all the paperwork involved. I heard that all the paperwork that needs to be filed by the ETF issuer it's so overwhelming that they decide not to onboard any European clients. So yeah, you would need to use options for it, unfortunately. And I don't really have an alternative. I can try to look it up. So Nicholas, maybe take this away. Let's see what maybe I can come up with an answer for this for
Switzerland?
next webinar. Switzerland or Europe in general for trading these
Okay.
ETFs. Yeah.
And we have one from Devendra here. He says, I'm not sure exactly. Maybe there's a typo. What about Heidenberg on signal, just
Yeah.
flash sell signal? Can
Now
you?
let's just skip that question. I'm not sure what that means. Maybe Devendra,
Okay.
please
And then
retype that.
Thomas says, are level 1 pullbacks in trend radar a place to sell out of the
Oh,
money calls?
uh not necessarily. So Thomas, that to me, that
If we own the
alone.
stock, he says, if we own the stock.
Oh, as okay. So if you own the stock to sell those calls, because that's a bearish strategy, right? So I'm not sure how that would work because if you own the stock and I guess you just want to protect yourself, yeah, I guess maybe it is in the anticipation that it will go up, but it's a bearish strategy. And to me, a level 1 pullback or level 2 pullback, the pullback just already happened, and oftentimes there will be a bounce to the upside. So I'm not too sure how this would work. But this is an interesting topic. And we're going to cover what's called the wheel strategy. Maybe you've heard of it in one of our upcoming Lunch and Learn sessions on Tuesdays.
Thanks. And then Lenny says, and Daniel, this is right? He says, is USO an ETF? Yeah, right? Because based on
Yes.
oil futures expiring at the end of the month, right?
Yeah.
Yeah.
Something around there. Yeah, there's some. It definitely follows the oil price based on some underlying. But yeah, that's definitely an ETF stuck to the oil price.
Perfect. Okay. And then Neil says, I'm on the German market. Okay, Niels, I'll keep that in mind. Thank you. And then Arthur says, I checked the long bounce setups. It looks like many of them are under all three of the MA rush lines. It seems for him that many symbols since August have broken the MA rush lines more than in the past. Have you also noticed this? Could be a warning signal for the whole market. Are we going to reverse? That's a good point because eventually, if we're under the lines, MA rush will eventually go bearish. But
Yeah, but if you look at the overall market, I think the SPY is probably a a good indicator for this. There is no indication of this. But you're right, the SPY, of course, tracks the 500 big US stocks, and they're not equally weighted. So, the most weighted ones are Nvidia, Microsoft, and so forth, and they kind of dominate where the SPY will go. There is, and maybe next time, Nick is also a good point. There is an equal weight SPY ETF, well, S&P 500 ETF, that sometimes gives you a better idea of what's going on in the overall market. So let's take this away as well, and we're gonna maybe perhaps add this to our review in the next week. So Nicholas, maybe
sure.
also take a
Yep,
note
the
of
equal
that. Yeah.
weighting. And this is,
Yeah.
here in the SPY, like we're clearly above the 3 MA rush lines.
Yeah.
And of course, MA rush is super slow. Even if we drop down to that broken resistance level, if we drop down below the lines, it would take
Yeah.
many months of downward action for it to finally decide we're going bearish.
Yeah. And I think the best example of this, sorry to interrupt, is just this correction here during the tariffs disagreements. Look how deep we corrected, way below the MA rush line, and how fast we recovered. And MA rush did not change its mind. So we've remained bullish, and we've been bullish for years now. Since 2023, we remain bullish, and for good reason. And this indicator, MA rush, is designed to be conservative by nature, meaning even after a pullback, it will stay in the same trend.
Look at that
Unless
liquidity
all the
capture, Daniel.
signs.
That's a
Yeah, it's beautiful. Yeah, exactly. And in fact, this is one of the setups that we will be looking for today. Yeah, pullbacks, maybe not as deep as these ones, with a liquidity capture, which can often be signs for a bounce of a level towards higher price levels.
Okay, and then let's wrap it up with these last two questions. We'll get to the rest later. So the next one is, I think this is easily answered, Daniel, and very shortly, Lenny says, on the Bitcoin chart, and we have another one about Bitcoin. If you could please go back to Bitcoin. He says, how do you know that there was incredible volume that you were talking about? Where does it show volume? How did you see that? And I figured you saw that due to the liquidity capture on
Yeah,
the chart.
exactly. So we don't even have a volume chart on it. So if you get these events, Lenny, these shaded boxes here, these are candles with liquidity captures. And this can only happen if we are near an extreme, like this resistance level here, and the candle has above average volume. So I don't need to open up a volume chart.
And
It's
down there too, more
of the logic.
recently, liquidity
Yeah,
capture.
down here. But now
There's none.
Interestingly, and
Yeah.
there's nothing right now
Oh,
here on
actually,
this
there was.
level.
Sorry, right. Look there, Daniel. That liquidity capture
Yeah,
on the most recent bar. That's Lenny. How we know there's tons of volume. That's actually kind of
yeah.
bearish, which is we lost a level and there's liquidity capture above us. Um,
Yeah, so we'll see what's happening. I have a Bitcoin position, a long-term position. Once again, it's not for swing trading. I just hold it just in case something extraordinary happens in Bitcoin. But I will not be adding right now at this price level to this position because well, we'll see what's going to happen. But there is the possibility of a much deeper correction, even as deep as 74,000. I'm not saying this is going to happen, but I'm going to wait to see if how the market reacts to this key support level.
okay, last one. Yes, Massa. All the trading terms are in the boot camp. Everything we've spoken about today, resistance point and in the ebook, those are in the chat. Everything we speak about is covered. And Niels wants to know, Daniel, before you continue, what's the resistance level, if broken, on Bitcoin that you would say it's going to deeply correct if it
Oh,
gets
it's down.
broken?
It's down here. This will be the next level down here. This red line at 74. That's the next one I see.
Perfect.
Yep,
Okay, that's all for now, Daniel. We'll
perfect.
cover the others later.
All right, so now let's move on. And before we look at these setups that we have in store for the coming week, let's have a quick review of what we found last week and how these trades worked out, or these ideas worked out. So for this, I'm gonna move over to our watch list that we had created last week. I'm gonna see all these watch lists that we create over the months. So this was the last one here, weekly swing trades 2025. And those of you who are subscribers to our dashboard, you will see this watch list also in your dashboard. And I'm gonna start with Amazon. It was one of our trade ideas. Uh, Amazon was interesting. It pulled back to this support level, this red line here. It's long-term bullish for 552 trading days at this key support level. We're still there. So this trade is very much still in place. This level has been holding so far. And I'm looking for a bounce off this support level towards higher price levels. So Amazon is pretty much still where we were. Upload we skipped. You can see this symbol was not selected. At Ladem Global Education Inc. Yeah, a beautiful setup here. Zone break retrace, one of our favorite setups. Zone break here. We came up, and I remember when I said last week, for those of you who joined, this is a very nice symmetrical setup, meaning the speed at which we went up after the zone break, you can see the zone break here, and the speed that we went down towards the broken level was pretty much the same. So it took pretty much the same time to go up as it did to go down. And what a nice bounce we had off this level. So beautiful zone break retrace setup that worked out beautifully. Banco Bilbao and Audrey, you must be happy about this. I'm not sure if you added to your position, but what a move that was. Wow. I mean, that is textbook bounce setup. Bullish stock, bullish for 708 trading days. Yeah, prices came down from this key resistance level down to this support level. And this is what we call this trade, a long trade. What a move off the support level on Thursday. And now we're right at this resistance level with a liquidity capture. So to me, if you are on this trade, perhaps take some profits here because we may see another bounce off this level. Who knows? But yeah, beautiful bounce to the downside. But yeah, nicely worked out bullish bounce trade for Banco Bilbao. So I'll quick look here. All right. Hilton Holdings. All right, let's have a look here. What happened here? So Hilton was interesting last week. Actually, it worked out nicely. We had a bounce set up in Hilton last week. Nice move upwards towards this resistance level and the pullback in the end of the week. And now we're once again at this key support level. And, maybe rinse and repeat would be in order for Hilton as well. So definitely a nice setup. HSBC Holdings. So what's going on here? Also a setup that we picked. Yeah, here the correction seems to be a bit bigger. I actually really like the setup too because we had this gap to fill here. We dropped on Friday ever so slightly below this resistance level, which may now be acting as support. Looks like we might be coming down to this resistance level. You can see this green line here at 949. Still, nonetheless, I am very bullish HSBC, and this gap above here screams to get filled. All right. And one more time, Hawkins Inc. That's the one that did not work out as planned. Unfortunately, it was, well, I mean, it's not the end of the world. It was our trade of the week on Monday. I still like the setup. It's a very bullish stock, Hawkins Inc. But this correction here from the support level is just a bit deeper than I expected. But if you hold it here, yeah, and we open bullish on Monday, I think we may see a continuation of this bullish move upwards. So that's the verdict, so to say, is still out for this particular one. And once again, I think we had a strong week with our picks. There were a couple of other ones too. And overall, testament that these setups that we are looking for, these are high probability setups, at least in our view. All right. Now, with this, we're going to get to some of the symbol requests just a bit later on. Let me go back to my slides. And of course, today we're all here to find new interesting setups. We don't want to just bask in what happened last week. It's time to find some new setups. So what we're going to do is we're going to look at one setup at a time. And based on what we see, we're going to create what we call a watch list or a hot list. I'm going to share this watch list of all our subscribers. And then at the end, we're going to go one by one through the symbols in our watch list to identify the most promising ones. All right, so the first setup, and I start all the time with the same one because it's so powerful, is a setup where we have a long-term trending stock. That's going to be a condition, a precondition for most of what we're scanning for. So you want a long-term trending stock to the upside. Criteria number one. Criteria number two is we want to see a pullback within that long-term uptrend. Because as a trend trader, many trades that we point out here, these are trend trades. As a trend trader, you don't want to enter when prices are extended. That's why I'm so hesitant to get now into gold, because it's so extended, so expensive. I want to wait until prices pull back from the top towards lower price levels. We call it a healthy pullback. And on Trend Radar, these healthy pullbacks are registered by these red patches here, and we can scan for those. That's going to be very important to find. Secondly, we want this pullback to coincide with a key support level, ideally with a liquidity capture event. Then we have the trifecta: long-term trending stock, pullback to support with liquidity capture. Three key conditions coming together. In our view, this increases the chance that the pullback, so that the bounce will actually happen off the level rather than a break off this level. Now, how can we find these? Well, let me go to back to my dashboard here, and I'm going to go to my overall scan, and we can see here we are scanning right now to 5,749 symbols. That's incredible. And scanning is so fast, and only a few of them will qualify for these setups that we are looking for. Okay, so who remembers what was criteria number one? It was we want to find a stock which is long-term uptrending. All right. So for this, we're going to use our MA Rush indicator. And if you remember, MA Rush is the indicator on the chart. Let me just go back a little bit further here, which shows us whether we are bullish or bearish. I have to go back quite a bit here to find it here on Hawkins. It's a very bullish stock. Oh boy, let me find a different one. Let's go to Agilent. It's where the trend change has happened a bit more recently. So here, for example, we are bearish. Now we're coming down this big move upwards here. This might be just a correction within a bearish move, but the overall sentiment is bearish for Agilent. And our MA Rush indicator is showing this to us by means of these bearish or bullish labels on the chart. And depending on what label was the last one printed, we are either right now in a bearish trend or in a bullish trend. And then our scanner, we can actually filter for stocks which are currently bullish by means of this MA Rush column, which is correlated to our MA Rush indicator. And all we need to do is to click on the filter here, all right, and select bullish. And once I do this, you can see that right off the bat of our 5,749 symbols, only, quotes, only 3,033 qualify for being bullish. And this just took like, I don't know, 1/10 of a second to filter down from 5,700 stocks down to 3,033. But of course, not all these stocks are of interest to us. And for example, a stock like this, for example, ABBV, AbbVie, right now, even though we have a bit of a pullback here, actually, this is a quite interesting one. Let me just quickly see. Coincidentally, I stumbled over this. Yeah, but here I would wait for a deeper pullback. In any case, I want stocks which pulled back at least 3 levels on Trend Radar, or 4 levels. A healthy pullback. How can I find this? Well, I'm going to use our pullback column here, which can find these pullbacks of different degrees, level 1 or level 3 or level 4, whatever it might be. And one level I really like is a level 4 pullback, a deeper pullback. For example, just pick a nice stock here. AFL, AFLAC, bullish for 1,200 days. And currently, oh, this is a beautiful one. Actually, I'm going to add this one right away to our list. Currently pulled back 1, 2, 3, 4 levels. And this one actually, look at this. It coincides with this liquidity level here, with this former resistance level. All right, so I'm actually going to add the stock right off the bat to our watch list that we're going to create, because that's the beauty. Aflac Corporation. So, and in fact, just real quick, if you look at our trade notes here, we can see that we did call out Aflac in the past. Yeah, as a potential long trade. Let's check it out. On August 2nd, we called it out if this loads. Yeah, when Aflac was at 98. Yeah, down at this level here. And what a bounce we've seen. This is exactly what we're looking for. Perfect. Okay. So Aflac once again in our purview. What I'm going to do now, I'm going to add this symbol to our watch list for next week. So I'm going to go to my watch lists here. I'm going to create a new one. I'll call this a weekly swing trades with today's date. Oops, 10th, 18th. There we go. And I'm going to create it. And then what I'm also going to do is I will share this watch list with you. I'm going to use this share button here. Now it's shared with all our subscribers. And I will unshare the one from September 13. That's out of scope now. And we only share the last 5 watch lists, not clutter your workspace too much. So unshared. Perfect. And we're going to add Aflac to our watch list. Perfect. So done. Our first stock has been added. I really like it. I kind of stumbled accidentally over this by just showing you an example. But this is a beautiful stock of a long-term trending stock currently experiencing a bit of a pullback. Perfect. So bullish stock, level 4 pullback. But what we also are looking for are pullbacks to a key level, to a key support level. So how can we find this? For this, we're going to use our Liquidity IQ indicator, which shows us these support and resistance levels. And we're going to look for what we call a bounce setup. So we're going to go to our filter here next to Liquidity IQ and select long bounce. And once I do this, you can see of our 5,749 stocks, only 34 stocks qualify for being bullish, having a level 4 pullback, and price coinciding with a key support level. I'm not talking about finding the needle in the haystack. And this was possible with just a few clicks. And there's one more thing I like to do at this point. I like to sort by trend length, by stocks which have been trending for the longest time. And the first one, for example, that comes up here is this German stock. What is this? KSBSE. Okay, I think that's an industrial. And let's see what this does. All right. Yeah. Doesn't this setup look promising for all those German traders in the room? Long-term trending stock for 1,160 trading days. After the all-time highs from July, a pullback to this key support level with a level 4 pullback on trend radar. Very interesting, symbol. I'm going to add this one as well to our watch list. All right. Perfect. The next one is a crypto symbol. I don't think I'm going to put this to our watch list, but let's just have a quick look what's happening here. Tron. That's interesting too. I never really, actually don't really know what this particular symbol or crypto is all about, but look at this nice move in Tron. Well, I guess it's very cheap, but nonetheless, maybe, if you're a crypto trader, if you want to speculate, that could be an interesting point to perhaps add to your Tron position or create one. Long-term bullish, level 4 pullback coinciding with a key support level. I'm not going to add it to the list here. I'm more interested in trading equities than crypto, but, if you want to speculate a bit on crypto, this could be the symbol to do so. Hilton is the next one. Yeah. We mentioned it before. It was on our radar last week. We had responded very nicely to this support level. It jumped up. It came back down now to support. And I think once again, rinse and repeat perhaps. We could potentially go long Hilton again. I'm going to add this to our watch list once again to be reviewed. All right. Okay, another German stock, Allianz SE. Yeah, all the insurance companies, Allianz is in financial services, in the insurance business mainly. They suffered on Thursday. I'm not sure what happened there, but also the insurance ETF, it gapped down on Thursday and all companies related to this, they're experiencing a bit of a pullback. But also, this one could be an interesting, long opportunity. Long-term trending stock, gap down, a gap that oftentimes gets filled over time to this key support level, which once again could be an interesting long opportunity. So I'm going to add this one also to our list. Okay, now, and you could go through this list here step by step. I'm not going to do it right now because I want to show you a little trick. Sometimes these conditions, which I have shown you, are a bit too stringent. We miss out on some of the stocks that we're really interested in. And one criteria that I'm sometimes ease on is the pullback criteria. Let me show you what I mean by this. Let me remove this pullback filter. And now we're only looking for stocks which are long-term bullish and near support. So the first one that comes in mind here is, for example, Dollarama, a Canadian stock, a dollar store stock. Yeah, currently at this key support level. We're coming from below, so I don't really like this too much. Actually, this was one of our trades that we called out when the stock was here. The pullback was a bit deeper. And then we're right at the support level again. I'm going to not add this to our watch list, even though if you're long Dollarama, this now could be the move which propels the stock to higher price levels. But it's not the cleanest setup because this support level has been broken previously. So I'm going to skip it. But the next one is AGG Gallagher, an old friend of us in the insurance business, financial services. And look at this gap here and where did it end? Yeah, at this key support level. So we gap down, a gap, once again, that screams to get filled. And it's a very bullish stock. And I'll show you this in a second. So look how bullish the stock was or is. Yeah, we made all-time highs back here in June this year, then a sharp pullback to this key support level. We bounced off the level towards higher price levels. Now the pullback once again to this key liquidity level with a liquidity capture. Yes, on yesterday's bar. So to me, especially if this gap, which screams to get filled, and if it gets tested, we need to go at least go to this price level here. So I really like Arthur J. Gallagher. I'm definitely going to add it to our list. All right. Perfect. Okay.
Daniel, could you answer
Moving
this
on.
question? So we have a question here from Masa
Yeah.
Hidayati. Sorry for all the questions. Can you explain a bit more what you mean by liquidity capture coinciding with support zone? So what does this mean?
Yeah. So a support zone is this red level here. See this red line here? That's a support level. And oftentimes, price will bounce off these levels, especially if the stock is bullish in the first place. You can see it's going up in the first place. So a bounce to the upside, that's not a bad bet to do. And in our view, the odds of having this bounce to the upside are further increased if we have these liquidity capture events at the same time or recently happening. You can see it here on the candle on Thursday. This is Thursday's candle. We came near the support level and we had this liquidity capture event. And this is an event which happens if a candle comes close to a level, it does not completely break it, and this candle has abnormally high trading volume. The interpretation can be agnostic, but one way to look at it is that something is happening at this level. For some reason, volume is spiking up. And you may interpret this as, hey, perhaps buyers are stepping in, preventing price from going further down. And instead, price will bounce off this level to further price levels because this level obviously is of interest to some people.
And I think a good point to point out too, if people aren't aware, is like, okay, we have a support zone down here, a support level. That support level was identified because historically, when price tried to go below that level, a lot of buyers stepped in and it pivoted upwards. So these support levels are based on what we call pivots, pivot lows. They're areas where price could not drop any further. There was a lot of buying interest and price moved up once it came down to that level. And once we revisit that, and we've got what we call liquidity capture, it's basically telling us that not only are we revisiting a level which used to find buyers and used to find support, as we call it, but right now there's a ton of trading volume coming in, meaning that support is stepping up to the, to the plate right now, and it's holding up. And it's very generally an indication that, yeah, like Daniel said, something's happening, and because it's a support zone, history tends to repeat itself. There's a good chance that this level is going to hold for the near future.
And of course, it's a chance. Yeah, there's no guarantees in trading, but in trading, we are playing the numbers game. Yeah, you want to be right more often than you're wrong, and you can benefit from this and profit from this. And by the way, Nicholas, nice baseball analogy. Was this in the honor of the baseball playoffs right now?
I have
Stepping
no
up to the
idea about
plate?
baseball playoffs, but yes, that's
No,
yeah.
just kidding.
Thank
All
you.
right, perfect. Okay, so I hope that answers the question, Masa. All right, so let's move down a little bit more. SNL.AX, Supply Network Limited. Let's check this one out. Yeah, not my favorite stock here. It's too volatile, too long sideways near the support level. What I want to see ideally is a bounce right away. So we go up like to this resistance level and we bounce right away. Here we've been in this area for a long time. Not so interesting. CETAS or Cintas Corporation, yeah, it used to be one of my favorite stocks when it was up here. I thought we called it out at some point that a bounce may be happening off this support level here. This obviously did not work out. Now, however, we are at this key support level down here with a liquidity capture on the last bar on Friday. And I think this could now be the end of the line where this deep correction of the all-time highs here from June finally comes to an end. It's a long-term bullish stock. There's no question about it. It just entered right now is sideways phase. And this happens oftentimes after a strong move up. See this move up here, very bullish move up. Now we are consolidating. And these consolidation moves, they're often sideways, but they're tradable, especially if we are at the lower end of the sideways move. And you may say, okay, perhaps the lower end will be around this level here. So maybe it's going to go a little bit deeper down to like 180, or perhaps you're going to bounce off right here from 184. Nonetheless, I think Cintas is a very interesting stock for a potential long entry, especially at this lower end of this deeper correction. So definitely going to add this one to our watch list as well.
Daniel, what
All right.
setting did you release to actually? Yeah, so Donna wants to know what setting did you relax to get the 213 stocks?
Oh, I relaxed the pullback setting. I took it off.
Thanks.
And the reason why, Donna, just to explain to you why, sometimes, especially if we are getting into a sideways consolidation, if we're looking for stocks to be at the lower end of the sideways channel, trend radar will be all red. You can see it here. It's like all levels red. This is no longer a level 4 pullback as per trend radar. Nonetheless, that's a very interesting setup because we're just at the lower end of the sideways channel. That's so that's oftentimes a good idea to relax that
And
one.
we're already moving up after liquidity capture. And David wants to know, David, so he wants to know how often do the top and bottom, so basically how often do resistance and support zones change? So we're on a daily chart here. It depends on what price is doing. Are there pivots or are there not? But
Yeah,
generally, it's going to take, at
yeah,
least 2 weeks to a month for a new level to be recognized on a daily chart.
yeah. Exactly. And also one important thing is that in fact, when a level was drawn, any line that we see here, it will never change again. It will stay where it is. So we don't repaint, or this indicator doesn't repaint. It will keep the levels as they were found. Because it was always easier to find levels afterwards when we saw where prices pivoted off. But no, this is not what's happening here. These levels are drawn the way they are. They will stay there forever. So this level up here will never change. Will always stay where it is. This level down here will never change. Will always stay where it is. So even if prices go further down, this level, this red line, will not change.
And on that note, the more recent levels are more relevant, but old levels like Daniel, those ones that stopped drawing back a few months ago,
Yeah.
those are still relevant. So we wouldn't be surprised if price drops down. And where does it find support? At one of those old levels.
Yeah.
So just because something's old and it's out of date, or it's stopped being drawn, doesn't mean it's not still an important liquidity level. That's why we keep them there.
Absolutely. Yeah. Perfect. Okay, great. All right, so this was our bounds setup, and I spent so much time discussing these setups, but I think it's important to go through these in a detailed manner to answer questions along the way. But I really want you to see another setup which I like a lot as well. So what I'm going to quickly go back to my slides, and now we're going to discuss what happens if a level is actually broken. So level breaks will happen over time, of course. We cannot bounce off these levels forever. Eventually, they will get broken. But if this happens, we can also have new opportunities to trade. For example, if we see a zone break, we may make an educated bet that, hey, after the zone break, price will continue moving in the direction of the break. For example, here support was broken, and the bet could have been, okay, we're going to continue moving downwards. Or when resistance is broken, we can bet on the fact that, hey, we're going to continue moving upwards in the direction of the initial breakout. But one thing that you should keep an eye on is the typical market fake out. So you can see it here. Price initially after the zone break goes up, but then it stops going up. And instead it comes down again, down to this broken resistance level. We call this the market fake out. And oftentimes when this happens, this resistance level, this green line, will now act as support. You've heard it before probably. Resistance can become support when it is broken. That's exactly what happened here. And oftentimes this can be the launch pad for the actual breakout move to commence. And we call this the zone break retrace setup. And we can scan for the setup with our Liquidity View dashboard. Let me just show you how this can be done. Oops. And I'm going to focus only, actually, let me just show you first how to set the setup. You're going to go to Liquidity IQ setup here and select long break retrace, this criteria here. I click on it. You can see only 66 stock qualified this weekend for this particular setup. One thing I want to do is I also want to real quick focus only on the US equities because, let's just focus on the main ones because otherwise some of the more exotic stocks are perhaps not so interesting to trade. So I'm going to only focus on the ones that are trading in US dollars right now. But if you are interested in the other ones, well, by all means, please remove this filter here to see what the other ones are doing. Okay, FBOT, Fidelity Disruptive Automation ETF. Let's check it out. What's happening here? All right, so what do we see? Actually a nice one. Look at this. Long-term bullish stock. We can see it here. We can see it. Price broke above this resistance level. Actually, right here, we came up, down to where? Almost to the T, down to this broken resistance level, now acting as support. Up again, down again. Where did we stop? Once again at this broken resistance level, acting as support. Up again, and now it seems that we might be coming down again. And if we do, perhaps around these price levels, this could be an interesting long entry opportunity. Well, zone break retrace setup, rinse and repeat. This can happen multiple times. I'm going to add this one to our watch list. Oops. There we go. Done. The next one, RR, Rich Tech Robotics. All right, let's check it out. All right, there we go. What do we see? I like this one too. Zone break, initial move up, retracement down to the level. Wow, the only thing here, it's a very volatile stock, and I would not be surprised that since the stock is so volatile that maybe we're going to come down a bit deeper because it's just the price swings are so big. But nonetheless, if you want to speculate, and this is a stock that moves a lot, these are small dollar values here. And if you measure this out, how big was this retracement from down here to here? That's an easy 28%. Yeah, if you get back to this level, it could be 28%. So this is a very volatile stock, but for speculation purposes, perhaps not the worst idea to think about a long entry along these levels here for a bounce off this key resistance level. All right, let me add this one too. And perhaps two more. USA Rare Earth Inc. Rare Earth has been in the talks quite a bit lately. And yeah, look at this move. What a move up here. I think that was the discussion when with China and rare earths. It spiked up, came all the way down. And now we have to see. And I think here, you see this gap here? This up gap? This hasn't been closed yet. And I think we may see a further pullback to this level here, close this gap, and then potentially another move further up. Definitely something I'm going to keep an eye on as well for the next week. Very interesting. And one more, and then we're going to review what we found. Chemical Corporation, a Canadian corporation, indeed, trading on the New York Stock Exchange in uranium. And we can see it here. Also, here we had the zone break above resistance, came up, down, back to the level, up again, and now it looks like with a little gap here that we are reapproaching this former resistance level. If we come down to levels like this, perhaps this could also be an interesting long entry opportunity, especially if you look at the price chart. This is a super bullish stock. A couple of retracements along the way, but nonetheless, it's been bullish for a long, long time. And yeah, this pullback could be an interesting opportunity to potentially enter in this this uptrend, long-term uptrend. So definitely an interesting stock. So I'm going to add this one as well to our list. Oops, there we go. Perfect. All right. Okay, so I think if I go back to my watch list here, we did get quite an interesting selection today, 10 stocks. And now, before we answer some individual questions, let's see which of those are the most interesting ones for the week ahead. So I'm going to start with, in no particular order, I'm going to start with Aflac, the one I stumbled on accidentally a little bit. But I really like it. Nice zone break retrace here as well for gap to fill up here. I like this. I'm going to add a trade note to this one. So we had it on August 2nd and worked out beautifully off the 98 area. We're going much higher to 113. Now we're going to add a new trade note for this one for a potential bounce off this former resistance level to the upside. All right. Cintas Corporation. I like it too. The only thing here, if I were to trade this, definitely I would put my stop loss below this resistance level here. So this support level here. Because if two levels are nearby, like this support level at 184 and this level here at 180, oftentimes, at least in our experience, the lower level is the more interesting or the more powerful one. So definitely you put your stop loss below this level, perhaps like here. But nonetheless, it's an interesting stock. I'm going to add it to our watch list as well. All right. Come on. There we go. Close it. Next one, Arthur J. Gallagher. All right. I like it too. Nice gap here at this key support level. Yeah, for a bounce, a stock which has been bullish for 1,343 trading days. Definitely an interesting candidate. And I'm going to add this one as well to our watch list. All right. There we go. I can see how many times we had this stock in our purview. It's a monster of a stock, especially with this deep correction right now. This could be a really interesting long entry opportunity. All right. Cameco. All right. Yep, I like it. If we come down to this level, right up here, I think it's a bit too early, too premature to enter into a long trade. But if you come down to the 80 level, this can become interesting. But here I would wait for a bit of a deeper pullback. But nonetheless, it is interesting. We're going to also add a trade note for Cameco and uranium. All right. Okay. USA Rare Earth Inc. USA. Yes. I have a friend who entered into this stock all the way up here. You should have consulted with us first because look how extended prices were, how far we were away from our averages. Now it's getting more interesting. We're getting closer to the averages and can come down to this level here. I think this could be a nice stock to speculate on. But I want to wait a bit further down to like 22, 23. That would be the entry area, which I would consider this one interesting. But nonetheless, I'm going to add it as well to our list. All right. Okay. Which ones didn't we have yet? Rich Tech Robotics. Let's see. Zone break retrace. Yeah. It would be something for speculation. It's very volatile. I'm gonna skip it. This is not the trades that I'm so much interested in unless you really want to use your high risk capital. You know, might be right for a big move. And of course, it can happen. But I'm going to skip this one. It's a bit too volatile for my taste. And I think this level might not hold off too strongly because it was broken previously here. Then it didn't hold up. It came back up. So it's a bit too messy for my taste. Fidelity Disruptive Automation, the ETF. All right. Yeah, that's an interesting one. Very bullish. Over the years. Now the pullback to this key or this broken resistance level. I like it. If you come down a bit further, this could be another launch pad for another move higher. So I'm going to add this to our notes. There we go. And then we have two more. This German stock KSB. All right. Yeah, interesting one as well. Long-term trending, 1,160 trading days, trending up now at a key support level. Yeah, definitely something to consider. Hilton, we already had it last week. Nothing changed after Hilton here. The stock, you can see it here. It's pretty much the same setup. I will not add another trade note, but it's kind of rinse and repeat. We may see another bounce of this key support level. And finally, Allianz, a German stock. Nice gap here. I like this gap. These gaps tend to get filled over time. Uh, if we believe in this and this gap might get tested, prices need to come up all the way down up here to 360 off this level here, 347. But here I also would wait for perhaps a bit of a deeper pullback towards this level before I enter. But nonetheless, an interesting stock as well. All right, perfect. Okay, I think we do have a really interesting selection for next week. Let's see how these ones will pan out. And now, guys, it's time for your questions. And
Yeah.
Niklas, do we have some questions coming in?
Yeah,
I
so I'm going
believe
to
we
answer a
do.
couple of ones real quick so we can get to the other ones that are a little harder and the simple requests. So Donna, what do the three MA rush lines represent? Those are multi-time frame volume weighted moving averages that are very resilient to short-term fluctuations. So basically, they're just a reading of momentum. Don't think too hard about the three lines. Think more about are we bullish or bearish, which tells us we're told this by little labels on the chart and
Yeah.
also in the scanner telling us, we've been bullish for this many days or bearish for this many days.
And one another read I take from these levels is I look at how far price is away from these levels, and the further away, the more extended a stock to me is, and the more cautious I will be to enter long. Because once something is very extended, like oh, a beer pullback might be coming as well.
Okay, another question here. So we got two questions actually about watch lists. Okay, so the first one from Lenny. Should we add to the current watch list previous stocks that still look promising, or is each week a new focus for you? You know?
No, definitely should keep track of your open positions. And no, of course, if stocks are still interesting, then we should not disregard them, obviously. But if you're in a trade, obviously you want to manage your position. So if you took a position, make sure you manage it well. You book your profits when, let's say, price approaches resistance, for example, because don't want to give it away. Or if things go against you, perhaps you lower your risk on that stock.
And Masa wants to know, so when you add something to a watch list here, Daniel, do you mean you're going to be investing on these on Monday?
Not at all, but what I do typically do is on Monday when the market opens, I'll see how the market opens and if these setups are still relevant, because sometimes the market will gap up or gap down. And the setup might not be so interesting anymore. And then I go a little bit deeper. So what I also do before I personally invest, and oftentimes we act on a couple of these symbols, I will do a sector correlation. So this is a more advanced topic, and we cover these in our lunch and learn sessions in detail. Is I see what is this sector doing in which the stock is in. So let's say you are interested in insurance services. So okay, Arthur J. Gallagher and financial services. I can see, okay, the sector itself, the XLF, is bullish. And I look at the sector potentially then, like this one here, and say, hey, what is the sector doing? And say, okay, it pulled back quite a bit. And it may even pull back a bit further to this support level here. Maybe I'm going to wait until this correction in the financial sector is done before I enter into this stuff, because it may go down as the sector goes down. People say flood lifts all ships, or whatever that expression is. Nicholas, do you know how that works? The tide moves all ships. I forgot, boats.
Yeah, I know what you're talking about. Something tide floats all
Whatever.
ships or something. Yeah.
Yeah. Meaning that a stock is often correlated to the sector. If the sector goes up, the stocks in that sector will benefit from that as well.
Rising tide floats all ships or something like that. And okay, and the next question is right down here. Okay. All right, Daniel. So could you please go to Arthur? Yeah, there we go. So someone anonymous said, hey, this AJG looks so bearish or sideways to down. I wish I could see more the way Daniel sees charts. And before you answer that, Daniel, there's another question from Ed. And this was about Arthur J, I believe. He says, would volume IQ pick up on this? And we don't have volume IQ here, but I'm looking on a daily chart on TradingView. And Ed, volume IQ usually does line up with liquidity IQ to a good extent. And on Arthur J. Gallagher, Daniel, we just lost a tier 2, but of course we still are holding that support level. But they do coincide.
Yeah.
Yeah, we got a gap to
Yeah.
the upside.
And yes, it looks
Why
bearish
sorry, Dan, why do you think that Arthur J. Gallagher is not that bearish? Because someone said it looks so bearish. So why don't you think it's bearish?
because I'm looking at the bigger picture. So if let me go back to my chart here. If you look at the big picture, first of all, we can see, look where we're coming from. This is a huge uptrend. And if you were to measure what is this correction level here that we've seen right now from the last swing low, like this one here, I think this is just a regular retracement of that bullish move up, perhaps a 61.8 retracement. These are deep retracements, but these happen all the time. And these sideways consolidations, they do happen. And if you want to get into something at a better price, sometimes you need to wait for these deep corrections, even though they look short term or even medium term bearish. If you look at the big picture, it's a bullish stock, and we are at a key level here. So maybe it's worthwhile to take a shot at this level, plus a gap to fill, which hasn't been filled
And
yet.
I'm reading Daniel, one of our prototype indicators there. That's a down gap on Arthur J. Gallagher. And over the last 15 or so years, 20 years, there's been 277 gaps like that. And this is the only one that's never been filled to the upside.
So far,
99.6% fill rate. So there's a high chance we're going to fill that.
And of course, that makes sense because that stock, obviously, you can see it here. It's been so bullish. And yeah, gap fills are a real thing. These don't happen all the time. And yeah, as Nicholas said, so far, all of the down gaps, well, price gap downwards, have been filled over time. And, by the way, this indicator, which Nicholas just mentioned, it's a prototype right now, but it's going to be released very soon. So stay tuned for this. It's going to be very interesting.
Oh, yeah. Okay, thanks, everybody. Donna and Vicky and Aubrey. It's a rising tide lifts all boats, lifts all ships. Okay, so Frank wants to know. Okay, so this is a great point, Frank. He says that a liquidity capture, oftentimes he must notice, this is where buyers or sellers place their stop losses because it's.
And Nicholas, you're a bit quiet. Maybe your mic is a bit further away.
Oh, sorry. Can you hear me better now?
Yeah.
So oftentimes at these liquidity levels, that's where people put their stop losses. So big companies or the market makers and funds often sweep them away and then we go the other direction. So this is, I think, why we have what we call support and resistance zones. So we give ourselves a range of tolerance based on current volatility, and you don't just place your stop right at the level, right? You place it a little bit lower.
Yeah. And just to comment one more thing on Arthur J. Gallagher. So yeah, if this looks bearish to you and you're not comfortable with the setup, then don't trade it. And trading, it's so important that you actually believe what you're doing, because only then you will stick to your plan and execute as you should. And of course, there are ways to do it. You can manage your risks. You can perhaps use options if they're affordable for Arthur J. Gallagher at these price levels to really limit your risk. And perhaps reduce your position size. Other things that can be done, or just stay on the sidelines. So if you're really not comfortable, hey, say this looks really bearish to me, yeah, stay on the sidelines. That's perfectly fine. There's so many stocks that you can trade. You don't have to, follow the ones that I pick. In fact, it's just ideas that I find using our dashboard. The beautiful thing is that there's so many different trading styles out there, and they all have merit. And whatever your trading style is, this dashboard will help you to find the right symbols. This could be earnings plays, or this could be a income generation plays. We focus on dividend paying stocks and maybe selling options, stuff like this. And all these ones can be found off the dashboard. And this reminds me, so if you want to find out about all these different scan criteria, you can see here available in the dashboard. Check out our bootcamp. They're all detailed in there.
Daniel, can we go on to symbol requests now?
Let's do it. Yeah.
Okay, the first one is open. OPEN from Devendra.
Open. All right. Open Door Technologies. Let's check it out. Okay. So bullish for 53 trading days. Zone break on September 5th. Initial move up. A gap that hasn't been filled yet. Got this one. Nicholas, any news on this gap here of our indicator? You want to quickly take a look?
Yeah, let me check. Second. Open Door Technologies.
So that was an up gap, which
is it an up gap?
That's an up gap, yeah.
Up gap. Okay, yeah, we haven't filled it yet. It's 63.6% filled, and there's been in history of this stock 93.3% of the time. This is the only time it hasn't been unfilled. So I'm pretty sure it's going to fill, and we're almost filled. We're like 3/4 of the way there.
Yeah,
2/3.
And by the way, that's going to be one of the scenarios that we're gonna look at when this new indicator comes out. Because right here, what you can see, there's a gap fill in progress. Historically speaking, every single up gap has been filled to the downside. So what this could tell you is, okay, instead of like investing right now into the stock, you're gonna at least wait until this gap is filled. And if it does, look with which level it will coincide with this former resistance level now acting as support. So this is going to give you more intel on when or on timing your trades. Because right now, going long perhaps not the best idea because this gap fill is in progress. And it's the only up gap which hasn't been filled in the history of the stock. That's quite impressive.
Yeah, and Daniel, okay, the next symbol is going to be Palantir. And at the same time, while you go there to PLTR, I think that's Palantir, we have
Yeah.
a nice question from Masa says, your team seems so passionate. What motivates you to share this knowledge with others?
Because we first of all invest. We use this for our own purposes, for our own trades. And from that point of view, it's very easy to as well share it with others. And you know what? Sometimes Uh, and other motivations, of course, there's some commercial motivations to this dashboard is available for a price, and this keeps our company alive, and we can pay our food on the table. But the other thing is that sometimes just talking about these setups just helps me reflect on it as well. Just by discussing it. Sometimes I just look at the chart silently. I don't have the sounding board, but just talking about it right now in the webinar helps me further qualify certain steps in my mind. So this is just, a bit of my own interest, but also, of course, trying to share my knowledge. And we are one community. We could not be doing what we're doing without our dear users. You're dear to our hearts, everyone. So it's a win-win in the end. And that's every business adventure should be a win-win. So this is where the best products are born. Okay, Palantir. Yeah, a very bullish stock. But we're fighting a bit with this resistance level here. And look how beautiful these liquidity capture events came in and these drops afterwards. Yeah, also extended and expensive. And this was a crazy massive move Palantir has done. Exponential, really, just in one direction. A bit too expensive right now, I guess, to get in. But if you ever go back, perhaps what this support level here at 143, Palantir could be an interesting opportunity. Entering right here where prices are extended and we are just below this key resistance level, maybe a bit risky to me. Yeah. All right. Anything
Sorry, Daniel, I was muted.
else?
Okay, so the
Yeah,
next one is going to be, okay, we looked at Open Door Technologies, we looked at Palantir. Um, Lending me to think, but I'm wrong in my thinking. Okay, did we look at CTAS?
no. Oh, yeah, that's Cintas.
We
We've
did.
looked at it.
Okay,
Yeah,
okay.
yeah.
The next one is going to be USAR, I guess. It's not a request from Kevin, but Kevin says it's
That's
a
a
small
rare
early
earth.
phase rare earth metals company compared to MP, which has huge contracts with the Department of Defense, and he just thinks this is an interesting one. Yeah, so maybe we already looked at
Oh,
this.
yeah. It is. And I mean, I think if you see a bit of a pullback here, Nicholas, real quick, just for the fun of it, what about the gap fill on this
Yeah,
one?
sure.
I'm
Second.
so excited about this new indicator. We're testing
This is
it.
an up gap, right?
Yeah, yeah.
And 1 second.
It's not been. It filled maybe like 5% so far, I guess.
No, it hasn't filled at all.
At all? Okay.
Not at all. And in history, there's 16 gaps. 2 of the up gaps have not been filled. Um, it's
Yeah,
possible this won't get filled. But
yeah.
the next one,
But
there's not much history. Yeah,
yeah, it's not much history. It's an as Kevin said, an early stock. The IPO was not too long ago,
yeah.
and I still would wait till prices come down perhaps to this level, and then potentially, yeah, speculate for a hype on rare earths, and this company may
Nice round
benefit.
number. Look at that. $20 exactly on the
Yeah,
liquidity
yeah,
level.
definitely.
Literally $20 to the tick. And yeah, actually 20 exactly is the pivot. The
Oh,
next symbol is going to be RCL.
yeah. RCL Royal. Oh, cruise lines, nice. 662 trading days bullish. Yeah, these cruise lines, they all have recovered after COVID, huh? Let me just quickly go back just for the fun of it. Because they were one of the biggest. What was COVID? Feels like an eternity ago. Oh boy. Time flies, huh? I kind of it's been so many. I guess it was here. Yeah, big drop here, but yeah, what a recovery. Wow. And now let's have a look where we were bullish. Yeah, nice one. Definitely a nice one for a long trade. Nice pullback to this key support level with a liquidity capture. I like it. I would put my stop below this from a resistance level because, as mentioned before, when there's two lines together like this, it's often the second one which is the more powerful one. So if you want to give this trade a bit more room, and we put your stop loss here, that could be definitely an interesting long trade. I like it.
Perfect. Okay. And the next one is going to be from Vicky, CRWV.
Yeah, core weave. All right, 628. Oh no, this is the technology sector. Yeah, let's have a look here. What's going on with this stock?
That's
Yeah,
tricky
right at
looking.
it is, and especially since we are at this resistance level here, and where is
It's a new
yeah,
stock. There's
it's
no
not
data
much.
on it.
Yeah, these are always hard to analyze, Vicky, because there's not so much historical data we can get data from. But I can see there's one resistance level where we're just underneath right now with a couple of liquidity captures. So,
Check trading view, Daniel. Actually, it's interesting with volume IQ.
all right,
This is a tier 2 zone and it's right above it.
W, no, CR.
WV.
Yeah. Oh, there we go. Okay. Yeah, let's check it out. Yeah, it's right at tier two. Yeah, but this one might act as resistance. Huh? So here's tier two volume IQ and this resistance level from liquidity IQ coinciding. Well, you may see a bounce of this level. But again, a bit hard to say, but it's definitely a critical zone right now. If we get above this level and break resistance here, I think that might be a nice follow through. But I would wait. I would let the market decide of where this one would go
Especially
before
because it's
making
such a
a,
new stock. And
yeah.
the next one is Micron Technology, MU, and then we have one other one.
Okay. MU, Micron Technology. Where do we have it? There we go. Okay. Zoom break 15 trading days ago. Bullish for 82 trading days. Yeah, it's very bullish, very extended. Not my cup of tea to enter right now, but of course it's a bullish stock. Yeah, let me just look at this one here. Yeah, I mean, I personally would wait for some sort of pullback before considering going long. Entering right now, chasing this trend, that's not what I would do. Yeah.
Definitely not. And the next one is TPH.
Yeah. TPH, 3 Point Homes.
Thanks for Daryl. Thanks for that, Daryl. He's just mentioning on Open Door that the gap was from a new CEO. And so, yeah, there's a
Yeah.
gap to fill. Let's definitely let it settle before going in. There could be a long break retrace.
Yeah. Yeah, bearish here and we're near support. So, I mean, let me just go back a bit. Overall, I think what somewhat bullish, regardless, even though the trend changed here. Would I go long at this level here? Probably not. I would want MA Rush to change its sentiment first before entering any long trades. But nonetheless, we are at a support level. You can see it here. A bit of a bounce there, but will this level hold against the bearish trend? I'm not too certain, especially there's another level just below here, which oftentimes is the stronger one. Yeah, I would stay on the sidelines on this one.
Okay, and then last symbol now from Daryl. It's going to be Gildan Sciences, GILD.
Yeah.
And we just have a nice comment here from Kevin. He just mentions about that rare earth elements stock. China has global monopoly. They control 48% of rare earth elements. And he's basically saying,
Oh.
yeah, we better not go to war with China anytime soon. They have the US over the barrel on tariff negotiations. Yep, so they're definitely probably, I agree, if there's some sort of interesting stuff that comes to change with all the tariffs and stuff, rare earth element stocks might be super interesting.
Absolutely. Yeah, and Gilda Science looks very bullish. We had the verge of breaking about this resistance level. Yeah, and you may speculate on the zone break. The only thing I see here is that we have earnings coming out on October 30th, so not too far away. Yeah, so that might shake the market and but yeah, definitely I like it. It's a very bullish stock. Nice uptrend, absolutely. Mhm. Great,
Great, and that's
perfect.
I
Yeah,
think
awesome.
that's it. Let me just check. Do we have any comments? Vicky just says thank you. Ed says good session. Thanks for your weekend time, Daniel.
Perfect. Yeah. And a quick reminder, guys, if you don't have our great Liquidity View dashboard yet, consider signing up for a free trial at tradingindicators.com/view. And if you want to extend your usage, you can choose an interesting monthly or yearly option afterwards. There's no contract. You can quit at any time. So really no risk. And you get access to more than 5,600 stocks. And you can scan for these setups that we are scanning through on the weekends here. And the beautiful thing about the dashboard is that every single day after the trading day closes, you will find new stocks to pick. And it's not just something you can do on the weekend. You can do it every single day. And that's really fun. It's actually enjoyable. And if I wouldn't talk so much about these setups, you will see this actually a very fast process that you can do. So it won't take you more than a couple of minutes. With this, guys, thank you guys so much for spending your time with us today. I know your time is precious. It's your weekend to your time to recover, to relax a little bit, to spend time with your family. So please do that now. And then see you soon in one of our future sessions. We have our Lunch and Learn on Tuesday. I'm on Metastock on Monday at 11 a.m. And then we have live trading, live futures trading on Wednesday at 9:30 a.m. So please look out for all these invites coming into your inbox. With this, guys, have a great weekend. Thanks, Niklas. Thanks, Homa. Bye bye.